Good day, everyone. You're welcome to today's live stream. If you can hear me loud and clear, please drop a comment. Drop a comment if you can hear me loud and clear. Also confirm you can see my screen. You're welcome to today's live stream. Hope you have a blessed weekend. Please confirm you can hear me loud and clear. I would also like to know the pairs you're considering trading. I'd like to know in the comment section what pairs are you considering trading today and what's your bias on those pairs. I'd like to know in the comment section. I'm waiting for your response, guys. I'm waiting for your response. If you can hear me, please let me know. Okay, I want to believe you all can hear me. Once more, I want to welcome you onto today's live stream. Now, before we start today's analysis, to remind you guys about the oral market reimbursement. Like for those of you who are here to take advantage of that offer, I want to let you guys know that the offer might close soon. It might close anytime soon. So if you're yet to open an account to have that reimbursement account, please do that. Do that as soon as possible. Do that as soon as possible. Like I told you guys, this is afford to miss. This is an offer you can't afford to miss. You fund your trading account with a minimum of $100. If you blow your account, if you blow $100 from your funds, you get a refund. You won't get such offer from any other broker. You won't get such offer from any other broker. So take advantage of this opportunity before it closes. It's going to close anytime soon, anytime soon. So take advantage. And if you're not going to trade this year, maybe because the year is coming to an end, you're considering not trading, you should still fund that account. Fund it. Okay? Fund it. Don't miss this opportunity. All right, let's go to business. So let's start with the fundamental. We have a lot of major news this week. A lot of major news, so we should expect high volatility in the market, though the year is coming to an end. But because we have this major news released this week, there's a high probability to see much volatility. We'll experience much volatility in the market. Okay, so today is Monday, December 15th, and Canada will be releasing its CPI data today by 2:30 p.m. So we should expect high volatility on Canadian dollar today. Canadian dollar pairs, we should expect high volatility on card pairs. Okay, so today is 15th. So let's check all the major news that will be released this week. Okay, so tomorrow, Tuesday, Great Britain will be releasing its claimant count change. Europe will be releasing its German flash manufacturing PMI. Also, 10:30 a.m. tomorrow, we'll be releasing its flash manufacturing PMI data. And by 2:30, the United States will be releasing its average hourly earnings, core retail sales, farm employment change, retail sales, unemployment rates, and by 3:45 p.m., The United States will be releasing its flash manufacturing PMI and flash services PMI. So there are a lot of major news that will be released tomorrow from the United States from 2:30 p.m. to 4 p.m. So this week would would see high volatility in the market this week. Then on Wednesday by 8 a.m., Great Britain will be releasing its CPI data, and New Zealand by 10:45 p.m. Nigerian time. Uh, New Zealand will be releasing its GDP. GDP. Okay, so dollar, for those of you who are considering the dollar pair, if you're executing a trade on a dollar pair today, you should be conservative. Should be conservative, and I would suggest you close your trades before the major news that will be released tomorrow from 2:30 p.m. Okay, that's my advice. And you could also wait for the news to be released before you place trade on dollar pairs. I took a trade on Euro USD this morning, okay, because I saw my I saw a bearish reversal pattern on the higher time frame, the daily time frame. So I took the trade. It's a swing trade. Okay, so it's a swing trade. I'm going to let the trade run for at least 2-3 days. So you should be conservative, and if you're not a fundamental trader, you don't trade the news. You should wait for the news to be released before you trade on dollar pairs. That's the advice I'd give. Okay. Then on on Thursday also you see we have several major news. On Thursday, Great Britain will be releasing its monetary policy summary, official bank rates, and also official bank rates will be released by 1 p.m. on Thursday. By 2:15, Europe will be releasing its main refinancing rates, monetary policy statement, and by 2:30, the United States will be releasing CPI data, unemployment claims, and core CPI on Thursday. So the most volatile days this week will be Tuesday and Thursday for the dollar pairs. Tuesday and Thursday will be the most volatile days for dollar pairs. That's the major currency pairs. Okay. Then on Friday, Japan will be releasing its policy rates and monetary policy statement on Friday. So we should expect high volatility on yen pairs on Friday. Then by 8 a.m. on Friday, Great Britain will be releasing its retail sales. Okay, so on Friday we should expect high volatility on JPY pairs. If you have any question, any pair you want me to analyze, let me know in the comment section. Can you guys hear me? Can you hear me? Can you hear me? Can you guys hear me? Okay, so let's start by analyzing dollar index. So, like I told you guys, I took a sell on GBP USD, meaning I expect dollar to gain value. But as you can see right now, dollar is selling right now. Okay, dollar is selling right now. So why did I take the buy on the dollar? Why did I go bullish on dollar? So as you can see, if you apply your Fibonacci tool from oh no, if you apply your Fibonacci tool from this swing low to this swing high, you would agree with me that price is at a discount area. And also last Friday candle, as you can see here, it closed as an inverted hammer. We had an inverted hammer on Friday, which indicates change in trend from bullish, from bearish to bullish. Okay. Now, if price breaks this low, okay, if price breaks the low of Thursday candle, there is a probability that dollar will keep selling. Okay, there is a high probability that dollar will keep selling if it breaks the low of Thursday candle. Okay, so at the moment, I'm still very bullish on the dollar. Okay, my buyers on the dollar, my bullish buyers on the dollar would be invalidated when price closes below the low of this candle. Okay. Now, after the formation of the inverted armor last Friday, let's created on Thursday or Wednesday, and that could be the reason for this reversal. You can see the fair value gap we had here. If you go down to lower time frame, there's a fair value gap. Let's go down to hour. The fair value gap was created. You can see. So this fair value gap could be the reason. This fair value gap could be the reason for this retracement. You can see. Okay. So for those of you who are considering buying the dollar, you could wait for price to fill this fair value gap before you buy. Wait for price to fill this fair value gap. After the price fills this fair value gap, just wait for a bullish reversal pattern to form before you go bullish. Wait for a bullish reversal pattern. I believe this is one of the reasons for this sell. The reason for this sells, and also I think the first candle for today. This is the first candle. So also the low of the Asian session. The low of the Asian session needs to be swept, needs to be used as liquidity. I also believe that could be the reason for the retracement for this sell we are seeing in the market right now. So if you are considering buying dollar, patiently wait for a bullish reversal pattern to form after price fills this fair value gap. Okay, so very bullish on the dollar, but if a candle closes below or price closes below the low of this, you can see the patterns we had on 1 hour last Thursday. We had an inverted armor, we had a spinning candle. You can see what we have here. So these are bullish reversal patterns. You can see that. That is the reason for the bullish bias on the dollar. Okay. So let's look at yen basket. I told you guys last day that yen is about to reverse. I told you guys yen is about to reverse. So you guys yen is about to reverse after filling the weekly fair value gap. I did show you guys this fair value gap on the weekly time frame. I told you guys several weeks ago that yen is aiming for fair value gap, and it filled it like yen is aiming for this fair value gap. After filling this value gap, we would see a reversal on yen basket, and that is what is playing out. You can see that is what is playing out since the market has been bullish and I bearish move on CHF JPY. I made over 120 pips. Yeah, over 120 pips on CHF JPY. The trade was executed at the early hours of today. That was around I think 3 a.m. I think it was around 3 a.m. I woke up and I saw the pattern. I just executed the trade. Okay, a nice pattern on CHF JPY. I'm going to share with you guys why I took the trade. So I expected yen to be bullish. You can see the candlestick pattern that formed. This was last Tuesday, Wednesday, Thursday. No, this was one. It should be Thursday, Friday. No, this should be Wednesday. You can see this candlestick that formed on the daily on Wednesday. It's an inverted armor. You can see that, and that is where the buy started from. So buying yen at the current market price is at a very high risk. Okay, if you're just buying yen from the current market price, you joined the trend very late. You joined very late, so your risk will be high. Okay, this would have been the best entry. This would have been the best entry. I told you guys when you open the chart, you should know where you should have entered the trade. If the market has moved 30 pips above that level, wait for a retracement. price does not retrace to that level, don't take the trade. Don't take the trade because you'll be taking more risk on that trade. That is my advice. Once you know you ought to have entered the trade from this point, you shouldn't buy from this point. You could have bought after price. You can see after price retraced back to this level, you ought to have entered. This would have been a good entry. After price retraced and tested that level, you should have bought. Now, price is far above this level. This is not a good time to buy. If you still want to join this trend, then you have to wait for price to pull back to this zone. Price might keep going up from this point, okay, but it's risky. It's risky because price could also reverse from this point because you can see now that price is at a fair value gap. You can see is at a fair value gap. You can see that, so it's most likely going to retrace from that area. So best wait for a reversal before you buy yen. Okay, so let me share with you guys the reason I took a sell on CHF JPY. Okay, though CHF is not one of my preferred pairs, but when I looked at the chart, I saw a very nice pattern on it. I decided to just take the trade, and I've already shared the strategy with you guys. The average strategy, the average strategy. All you have to do is just add up the opening and the closing price of the candle. Just add up the opening and the closing price of the candle, divide it by two. Whatever value you get, divide it by two. If the market opens below the average, you look for buy. Sorry, you look for sell. If the market opens above the average, you look for buy. I share that with you guys. Okay, very simple approach. Okay, CHFJPY. Let's see. It's very simple. Simple. You guys shouldn't complicate things. Don't complicate things. Keep it simple. Keep it simple. So let's see. So we apply it on the daily time frame. So you can see this was what we had last week. So let's calculate, and you can see the pattern that formed. I told you guys you should also consider the candlestick pattern that formed. You can see the pattern that formed there is a shooting star, a bullish shooting star. Now, after the formation of a bullish shooting star, you are expected to wait for the next candle to close bearish before you sell. Okay, you're expected today's candle will be the confirmation candle that we have enough sellers in the market, and that would be the right time to. But if you wait for today's candle to close, your risk on the trade might be very high. That's why you need to know how to analyze the market using multiple time frame, what we call top-down analysis. Okay, so last week candle closed as a shooting star. Now, after the close of this shooting star, if you had gone down to 4 hour, let's assume we don't have the daily time frame to work with. We definitely would have worked with a lower time frame, which would be 4 hour time frame. Now, if we go down to 4 hour time frame and we are able to identify a bearish reversal pattern after the close of the shooting star on the daily time frame, we don't have to wait for today's candle to close. So we would have taken advantage of this sell, which I did. Would have taken advantage of this sell. Most people will be waiting for this candle to close before they execute their trade. We'll be waiting for this candle to close. So after the close of last week candle, last Friday candle, go to 4 hour. What pattern do we have on 4 hour? You can see the pattern we had on 4 hour last week. You can see we had an hanging man and we had what looks like a spinning top here. These are bearish reversal pattern. We had a bullish hanging man, and after the formation of a bullish hanging man, you are to wait for the next candle to close bearish before you sell, right? And the next candle also closed as an hanging man, a bearish hanging man. That confirms the change in trend from bullish to bearish. Can you see that? You don't have to wait for today's candle to close. So this would have been a good entry. After the formation of this candle, this would have been a good entry for sell. So if you've not sold CHFJPY from this point, selling from this point is at a very high risk. Is at a very high risk. You can see that price is currently at a support area. You can see is at a support area. You can see that the market is reacting to that support. And we also have a fair value gap here. So there's a high probability that price might reverse from this point. If you also apply your Fibonacci from this swing low to this swing high, you can see that price is at a discount. And at discount, you don't sell. Selling at a discount is very risky. You can see that. So price is at a discount, price is at a support area, price is at fair value gaps. You can see. So it will not be wise to take a sell from this point. This is where you should have sold. And the market from that point, it has moved how many pips? You can see 137 pips. 137 pips. I exited my trade at 194.74. Yeah, it was at this point I exited closed my trade 194.74 on CHFJPY. So you can see the reasons for the sell. Now, using the average strategy after the close of last week, and you can also see on the daily time frame that liquidity was swept. You can see the liquidity that was residing at this previous high was swept. You can see that. Then let's get the average price for that candle. $195.53 plus 195.53 plus 195.71 divide 2. That's 195.62. 195.62. If today's candle opened below the average price, that will be a bearish sentiment. 195.62. This is one of the best strategies to know the bias for the day. Can you see it? Can you see this? Let me change the color so you can see. Okay, so you can see. Today's candle opened above, right? Yes, today's candle opened above. So going by the rules of the strategy, one is supposed to look for buy, right? That's a bullish sentiment. The rule is that if the market opened above the average price, you should look for buy. So you can see this weak candle or today's candle opened above the average price. And I told you the conditions, things you should look out for. Okay, things you should look out for. What will make the system fail, go against its rule, is that when the market is at a premium, you don't buy. Those are some of the conditions. When the market is at a premium, you don't buy. You don't buy. That's the reason I took a sell, irrespective of the fact that the candle opened above the average price. I told you don't sell at premium. Sorry, don't buy at premium. And also, if the candlestick pattern that formed at that premium is a bearish reversal pattern, you don't buy. Instead, you will look for sell. That's the rule of the strategy. Okay, that's the rule of the strategy. You only look for buys at discounts and sell at premium. So you can see that price is at premium. So you don't buy at premium, you look for sales. Very simple, very simple, very simple. If you look at GBP/JPY, let's see GBP/JPY. I told you guys last week that I'm waiting for, this was no, Thursday. I told you guys, some of you entered sell, that was on Tuesday after the formation of this. I was going to wait for Wednesday candle to close bearish before I would decide on what to do on GBP/JPY. And Wednesday candle closed bearish and it closed below the average. It closed below the average. Then this was Friday. If you calculate, let's get the average for GBP/JPY. You would have 8.5 plus 208 multiplication. Sorry. So let's get this 208.25 plus 208 point divide that's 208.26 20. Can you guys hear me? 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 Can you hear me? I hope I've not been talking to myself. I hope I've not been talking to myself. Can you guys hear me? Can you guys hear me? Okay, so my take on gold. Let's start with the daily time frame now. Is gold at premium or discount now? That's the first question you need to ask yourself. Is gold at a premium or discount? I feel gold is at a premium now. Apply your Fibonacci from the swing high to swing low on 1 hour time frame. I think gold is at a premium area now. I don't think this is the right time to buy gold. Gold has been bullish since last week. It's been bullish. This buy started from this point. The buy started from this point. That was 29th October. 29th October. That was when the bullish move started from. The most recent move started from 9th of December, which was last week, Monday, Tuesday, Wednesday, Thursday. Uh, no, last Tuesday. The most recent bullish move started on Tuesday. Tuesday, Wednesday, Thursday, Friday. Last week was strongly bullish. So if you didn't buy on Monday, you didn't buy on Tuesday, you didn't buy on Wednesday. I don't think it would be wise to buy from the current market price. It's over, I think it's over 1,000 pips. Yeah, it's over 1,000 pips. 1,437 pips. Those who bought from this point most want to sell. Most want to sell. And if they keep selling, price will drop. So this is not the right time. And those who missed these buys are praying, they are hoping that price will reverse to a fair value so that they can buy from there. So it will not be wise. Though gold might continue with his buys from the current market price, might just keep buying to 1,000 or 2,000 pips from the current market price. It's still not a good price to buy. It is not a good price to buy. You should wait for a reversal before you buy. You can see the value gaps that was created last week. There's a high probability that it will reverse to fill those gaps before it continues with its bullish move. So for me, it's best to look for. You can see the previous candle that formed. It's a shooting star, right? It's a shooting star. So if a bearish candlestick forms after this shooting star, probably today's candle closes bearish or tomorrow's candle closes bearish, you should expect sales on gold. Let's go down to 4 hour. So you can see the pattern that formed after the formation of the shooting star on the daily time frame. That was last Friday. If you look at the pattern that formed on 4 hour, looks like an engulfing. You can see we had an engulfing pattern. And after the formation of this engulfing pattern, a fair value gap was created, which could also be the reason for the reversal. You can see this fair value gap that was created here. Okay, and for those who trade ICT concepts, this is an order block, right? So this reversal could just be to test this order block or fill this fair value gap. It has filled this fair value gap, and the market is currently trading above that fair value gap. Probably if you go down to lower time frame, there's still a fair value gap above this fair value gap on the 1 hour time frame. Let's just see 15 minutes, 5 minutes. So you can see on 5 minutes we had this fair value gap on 5 minutes, which is above value gap we saw on 1 hour time frame. Let's see 15 minutes. Let's see 5 minutes. Most likely we still have a fair value gap above the 15 minutes fair value gap. Let's see. So you can see the fair value gap on 5 minutes. You can see this could be the reason for the reversal. Let's just say 1 minute. Let's see 1 minute. So if there's still a fair value gap on 1 minute, that could also be the reason for the reversal. And once price fills the fair value gap on that 1 minute time frame, let's just confirm it's likely going to drop. It's likely going to drop. Let's confirm it's likely to drop. Let me check the date. 7th, 12th of December. 12th of December. That should be Friday. 12th December. December. Few minutes, guys. 12th of December. So you can see on 1 minute, you can see, sorry, yeah, on 1 minute, we had, you can see this fair value gap on 1 minute. You can see this. I think we want to have a tiny, you can see this. Can you see this fair value gap? There's a tiny fair value gap here, very small one. You can see it. So this could be the reason. Let's see where price is at the moment. Let's see. Can you see that? Can you see that? Price has filled this fair value gap on 1 minute. And look at the pattern that formed on 15 minutes time frame. It's a bearish reversal pattern. You can see we had an argument, we had a bullish argument. The next candle closes as a bearish argument. If the current candle closes below this fair value gap, then I think it would be wise to look for sell. That would be a sell setup. That would be a sell setup. So my take on the gold is bearish. My take on gold today is bearish. So that will be all for today's session. Question or any pair you want me to analyze, let me know. That will be all for today's session. Any question, any question, any question, let me know. Any question? USD card is getting set for buy. USD card is getting set for buys. It's getting set for buys. If the current 1 hour candle closes as an hammer or a spinning candle, it will be the right time to look for buys on USD card. USD card would buy, would buy, would buy. All right, guys. I appreciate you all for your time. Appreciate you guys for your time. Our next session will be tomorrow by 10 a.m. I wish you all a profitable trading day. Bye for now.